talk to you about the moonshot opportunity for India's banking sector. You've seen the financial services sector evolve since the time that you took charge, in a sense, of an NBFC and then, of course, the bank in 2003. From your vantage point today, what could be the moonshot moment for India's financial services sector?
I think if I look back and then look forward, India has come a long way. In the 90s, my biggest concern was the export of the Indian capital markets. That we had a flurry of issuances of Indian companies listing at Luxembourg. And we did not even have the concept of a private placement in India. And it bothered me a lot that Indian companies were listing in a completely unknown exchange with virtually no trading, but companies preferred that to public issuances. From there to now say that we have one of the most active markets, probably highest in terms of number of transactions, to any global player anywhere in the world being able to trade on Indian exchanges, it's a huge step forward. The quality of the equity markets and now the depth of the equity markets should make all of us feel great. But beyond that, I think the debt market has more work to be done. And I think time has come for us to dramatically up our ambition. The financial sector should be the engine which supports India's aspiration. And I'm looking forward to India becoming a 30 trillion economy by 2047. And what does it take for us to get there, and what is the role of the financial sector as we go into that journey?
What do you believe you foresee for the banking sector specifically, and will you continue to play consolidator, a role that you have played previously?
See, I think don't expect, especially in the public sector, anything major till 2024 middle. But beyond that, I mean, my view is maybe we need 4 or 5 large public sector banks, and beyond that, it should be completely open for consolidation within banking. And we must make rules easier. We must be ready to let some of the public sector banks also raise more public market equity so that their holding goes to below 50%. And a whole host of things to encourage consolidation quickly, because technology otherwise will consolidate the sector in a way which may not be favorable for many of the existing players.
Speaking of possible changes and possibilities for the banking sector, I want to, ask you about what you made of the recent decision by the Mahindra Group to pick up a stake in RBL Bank. And the expectation is that perhaps at some point there will be a review or a rethink on whether corporates should be allowed into the banking sector or not. And we don't know whether that is in any form or fashion on the anvil or will be on the anvil. But your thoughts on that?
I think my fundamental view, and this is not a protectionist view, is one of the biggest issues in Indian banking history goes back to the whole basis on which banks were nationalized, where it was a case of large houses having stakes in banks. And we all know it. Central Bank was Tata's, UCO Bank was Birla's, and you had a situation where there is inherent conflict of interest, even if there is no direct lending. A direct lending by a bank to a business group is obviously not correct. But you can have indirect lending through the vendors, to the service providers. There can be so many linkages which can happen. And fundamentally, banking is a high leverage, high risk business. Not many corporates in the world get leverage at 10, 12, 14:1. And banking is one such business. You have to keep this fact in mind, that such high levels of risk in the system and the contagion which a banking failure creates in a system actually make a strong case of having banks independent of business houses.
So keep the doors shut.
This is my view, because of inherent conflicts of interest and the risk of self-dealing.
Let's now talk about technology, and you talked about how this confluence of banking and technology is actually going to lead to many more changes within the sector. In your experience, as you look at how this is played out today with the collaboration that banks have seen with fintechs, we've gone from that journey where it was whether the fintechs will survive to will the banks survive, to now a happy coexistence of the two and a happy collaboration and partnership of the two. How do you see this moving forward?
I think we will get it to a world of what I call as co-opetition. There will be areas where banks and non-banks, particularly the technology companies, will compete. And there will be areas where they will cooperate. And in that context, I actually feel that banks have been behind the curve. The whole payment space, to think about a phone pay and a Google Pay moving to a more than 85 or a 90% market share, while it was for the banks to take it, is a reflection of how nimble-footed players can take the lunch which long-term belong to the banks. And we just gave it away as a banking industry. And if we are not careful, if we are too much comfortable with the moat we have run the serious risk of becoming a pure utility with the front end moving to what I would call as the consumer tech players.
So can you get your lunch back, or is that now that boat has sailed, that ship has sailed?
In my view, again, the same issue comes there in the payment space. It's concentration. Two players own the market. So, and NPCI has talked about market share not more than 30%. But when it came time to implement it, they asked for 2 more years to be able to implement the rule of 30% maximum cap. So how are we going to handle the risk of monopoly power coming out of consumer tech is an issue which we need to address. And that is something which is the complete opposite of what you're seeing in the traditional banking in India, which is lots of players, lots of new players coming in, versus monopoly power, which consumer tech has the capability, where volumes just move in one direction. And I think payments system in India is a classic example of how quickly consolidation of power happens.
Given the fact that we're already seeing such a significant consolidation of power in the consumer tech and in the payment space specifically, what can banks do? I mean, does this keep you up at night?
In my view, banks have time on their side, but they've got to use it quickly. And as far as I can see, we really, and that's something which we are doing front-footed, we are dramatically changing the persona of Kotak Mahindra Bank. We are clear. We have to move to be significantly tech first. We have a record number of engineers, as I talk to you, working in the bank and joining on a daily basis. We are changing the whole DNA of the bank as I speak with you, because unless we can get tech and domain in a box concept, we are going to head for a serious risk of becoming utilities.
How challenging is it? How complex is it? You talked about changing the very DNA of the bank to make it tech first. What have been the big lessons along the way as you move down this journey, as you make this pivot?
I think you need to start with a very simple emotion, paranoia. And if you get that emotion right, the rest will follow. Most of us in banking believe that we have a right to have the moat, the regulatory moat, and the fact that we are very comfortable with our current basis of operation as something which will protect us. We need to have the fear of death for us to really get our act together.
A fear of death as extreme as that?
As institutions. I mean, you just have, why is it extreme? Look at what has happened in the telecom sector. There were 13 players. What has happened to all of them? Look at the airline industry. Look at steel.
So you're saying that could be a possibility if the banking sector doesn't disrupt itself?
Banking sector has to become a significantly more digital player. And the world was physical. Then we started talking about phygital, that is physical and digital, which is physical first, supported by digital. The world has moved to digital, which is digital first and physical supporting digital. That's where I see it go.
You talked about co-opetition and coexistence as well. And I want to stretch this argument to the context of banks and NBFCs as well. And we've seen a significant reduction as far as the regulatory arbitrage is concerned in this space. How do you see this co-opetition and coexistence over the next 5 to 10 years?
See, there is one myth widely prevalent, which is that the cost of funds of banks is cheaper than NBFCs. It's a myth. If you look at the cost of funds of an NBFC, there is no CRR, there is no SLR, there is no priority sector lending, The wholesale market for funds has developed a lot more with the mutual fund industry, debenture market, as also the insurance industry. Therefore, NBFC cost of funds for the top-rated NBFCs is no worse or not significantly negative than a bank. Lower-rated NBFCs cost goes up, rightly so. But for top-rated NBFCs, being an NBFC is not a disadvantage on cost of funds. I think the myth that NBFC's cost of funds is higher is a complete myth. In fact, the top-end AAA NBFCs in most of the times borrow at or lower than banks' rates, and they don't have a huge cost structure which banks have, which is branches, fixed cost and others. Therefore, NBFCs have the ability to compete on even terms on cost of funds. And that combined with no load of PSL, banks have 40% obligation on priority sector. So it is, I think, level playing for NBFCs today. And there is no question it is lighter touch regulation. The regulation in banking is significantly higher. Therefore, if you have lighter touch regulation, no disadvantage of cost of funds, I can well understand why many of the NBFCs don't want to become banks. And there are new players who will play the NBFC game without becoming a bank.
You know, you're talking about new players in the NBFC space. We've just seen a listing of the newest of them all. What do you make of that? And you know, how would you describe this as a moment for the industry today? The potential moment for the industry.
I believe the geofinancial services has significant opportunity to scale. And I have no doubt under the leadership of Mr. K.V. Kamath, they will do a phenomenal job. And I have always had the highest regard for Mr. Kamath and his ability to envision and execute.
But what do you believe will be the key challenges that they will have to contend with?
I think it's a marketplace. It's also a leverage business. Therefore, the beauty about a leverage business is when you give out money, you got to get it back. And you're highly leveraged, so therefore your ability for making errors for any financial player is very limited ability to make mistakes. So as long as they follow the mantra, and Mr. Kamath knows this at the back of his hand, I have no doubt geofinancial services has a great potential.